Hello and welcome to Mr. Allred's 5 Minutes On. Today I'm going to be discussing the concepts of income and expenditure. This is designed for a sort of a level 3 understanding, so geared towards BTEC business studies, especially Unit 3 specification on personal and business finance, as well as A-level. So a lot of this topic does come up in A-level as well, so it would be useful for you. So as I say, we're going to look at income and expenditure. So let's get going then. So income is essentially money coming into the business. So that's what income is. It's money coming into the business. And expenditure then is money that the business is expending or spending, if you like. And that is money therefore going out of the business. So we can split these two things into both capital and revenue. So we have capital expenditure, capital income, revenue income. So I'm going to start with what capital is. Well, capital really is wealth. It's wealth in the form of either money or assets. Assets are things which you own. So if you think about your mobile phone, that's an asset of yours. It carries wealth. Yes, it's not money, but it's worth something. Therefore, it's classed as capital. And that's the same for business. So if you think about any business, their tills, their tables and chairs, if it's a restaurant, their computer systems, that all carries wealth. It's worth something, and that's classed as capital. And we'll come on to this a little bit later. So let's start with income then. Capital income and revenue income. So capital income then, this is money which has been invested into the business. It's in the form of capital. Okay, so it's not profit, it's not revenue, it's not things that the business gets to keep. It's money that the business is going to use to enable it to make goods and services. That's what capital income really is. It's money that, like I say, has been invested into the business through a range of sources of finance. Okay, so if I'm starting up a business, I might get a loan from the bank. That's capital income coming into my business. It's income, it's money coming into my business, but it's in the form of capital. It's not in the form of revenue. Okay, it might be shares. If I'm a larger business, a PLC or an LTD, I might sell some shares, and therefore that might get invested into my business, and that's a form of capital income. I might put some of my own money into there. I might have some savings, so I'll put my own money into there. Again, a form of capital income. Or things like debentures and mortgages, which we can talk about at later stages. Again, these are injections of capital into the business. Revenue income then is money I generate from my daily operations. So if I'm a florist, my life's ambition is to set up a florist, and I'm selling flowers, those cash sales I'm doing, they are revenue income. That's revenue coming into my business, money coming into my business. It's not profit, because I'm not talking about my costs and what it's cost me to buy those flowers. It's purely the money coming in. So that's cash sales. It could be credit sales. I might say to somebody, well, you're buying a load of flowers from me so you can pay me in the future. That's credit sales. Or it might be if I've got a little flat above my shop that I own, I rent that out, and it's rent that then's coming into my business. Okay, so rent that I might receive. So that's revenue income. Okay, if we look at expenditure then, and I said earlier that expenditure is about spending money. It's where we spend money. So capital expenditure is the spending of money on assets, the buying of assets, the buying of things that businesses need in order to fulfill their role. Okay, so if we go back to my florist, it might be me buying a van to be able to deliver flowers out to customers. Yeah, that's part of my role. That van enables me to deliver that service, and therefore it's capital expenditure. I'm spending capital on that money. These really are my non-current, or what we call tangible assets, non-current assets, such as buildings, such as furniture, fixtures and fittings, vehicles. These are non-current assets that I need in order to fulfill the business purpose that I've set up. But these can also be intangible, things I can't touch. It could be branding, could be goodwill. I have to spend money to develop a brand, and a brand often carries worth. If you look at somebody like Apple, look at Coca-Cola, that label, that brand is worth money, and therefore is an asset to them. And it's been capital expenditure that's generated that asset. Revenue expenditure then is essentially, we might call these my bills. These are my running costs. These are things that I need to pay for as I'm running my organization. Okay, these might be inventory, the posh word for stock. It might be rent, it might be rates, it might be utilities, gas, water, electricity, all these things, the wages of my employees, all these things that I have to pay for to run on a day-to-day basis. They are my revenue expenditure. Okay, so this has been Mr. Orr's 5 minutes on income and expenditure. Hopefully that's given you a bit of an understanding about how we classify those different types of spending. Please like the video, please subscribe to the channel.